All right. So guys, welcome to our coverage of the ECB decision. This is Mark from FX Instructor. Now, folks, last time that we had an ECB decision, what happened? We actually had an exciting time then. The ECB opted to take action. This time around, there's very little expectation that we're going to get something out of the ECB. Why do I say this? Well, for one, there's little sign that the ECB is ready to undertake some massive action. Okay. Of course, textbook rules tell us that if somehow a rate cut happens, if we get a surprise rate cut, then we may or we should be looking at shorting the euro again. But as I said, consensus forecast calls for steady rates from the ECB this time around. The ECB would want to maintain some leeway in case a future crisis in the eurozone happens. They want to have unless it is absolutely necessary, they would want to have that 0.5 interest rate that they have right now as maneuvering space in case some drastic event were to happen. Now, if we look at the commentaries from ECB officials over the last month, since the last time, what have they been focused on? It sounds to me that for many of the ECB officials, what they want is not to just cut rates and cut rates and cut rates, but to come up with mechanisms that would allow businesses, that would allow people access to liquidity. Okay? It's easy to say, let's cut interest rates. But if a bank can make money by trading financial assets, by trading currencies, by trading bonds, by trading government debt, by trading commodities, okay, if they can make more money doing that, rather than extending a loan to, say, a business, why would a bank extend a loan? So this is the catch-22 situation that the ECB finds itself. Although they've been indicating that they can go negative interest rates if necessary, at the same time, they know that there's a lot of money out there. It's just not going to the sectors, to the right people, to the sectors that the ECB wants this money to go into. It's not just going to more productive uses. It's just being used to play with financial assets. Again, if you look at the commentaries, as we said, Nowotny was talking about greater liquidity. This was just last week. What else? What kind of statements have we seen over time? There's been, of course, talk about willingness to cut rates, willingness to go negative interest rates. But, like we just mentioned, the real problem really is how to direct that additional printed money to the right sectors. Now that said, folks, I guess we ought to just look at the charts now, and let's just remember our rules. Did you miss that, guys? Let's just remember our rules. Again, if there's any rate cut at all, that is something that's going to collapse your currency, especially since no one's expecting it this time. If there's any hint of no rate cuts for the next few months, no rate cuts until the end of the year, that can also be seen as a good sign. So that can also be seen as a good sign, as a sign that you are likely to get a stronger euro. So guys, the focus is not on the decision itself, but on what will be said in the press conference 45 minutes afterwards. Now that said, let's take a look at our chart and let's see how do we look technically. Are we in a position to expect a rally, or are we likely to ease off in our euro? So let me take a look at the big picture. Where do we stand in euro? If you look at your charts, okay, let me clean this up. If you look at the big picture, you've been getting that pattern of lower highs. Oh, this is monthly. That's too extreme for me. Let me go weekly. Oh, by the way, there's also talk that the ECB, or rather the Eurozone, is now ready to issue joint debt, something that the Germans have been against for well, ever since that proposal came out. Let's see where we stand in our euro. So this is our rally for July up to, let me see, when was the peak? July up to January 27th. Since then, we pulled back. If I look at my weekly chart, what am I getting? I'm actually forming a double bottom in our weekly chart. Now this is interesting. You formed a double bottom in your weekly charts. You had that sell-off before, but now that expectations are a little more tempered, now that no one is expecting any aggressive rate cuts, despite previous pronouncements by ECB about their willingness to do so, it looks to me like people are preparing for a test of our double bottom resistance in the weeklies, double bottom breakout point. Let me see this again from an even lower time frame. Are you really serious about the possibility of our euro rallying? How do we look from the daily picture? Well guys, I see that price action wise, we really don't have much in terms of momentum. You ended up with a high wave doji and then a spinning top in the previous 2 days. You're trying to break higher now, but so far you only have 55 pips of price action when you're needing, or when it is actually midday for Europe already. You've only had 55 pips of price action, even though like we said, it is already midday. So I'm thinking, not much willingness to really push this up. Let me just see first the structure of our charts from the different time frames. In fact, when you go to the 4-hour level, it looks to me like after an earlier attempt at a breakout, you are now facing the possibility of another spinning top, or a high wave spinning top, or a high wave doji, which would be interpreted as you lost momentum, you could not sustain your bullish breakout. And in the hourlies, what am I seeing? An attempt to pull back earlier, a long wick in the current hourly candle. So, what am I trying to say here, guys? That technically, we seem to be topping off already in our euro. Price action seems to suggest that we ought to be topping off. We ought to be looking for a bearish reversal. If you look at my indicators, dailies continue to look bullish. You're overbought in stochastic, you're rising in MACD. But again, momentum has been lost. When you move to your lower time frames, you're seeing confluence of bears in the 4-hour picture. But again, price action is telling us a different story. When you move to the hourlies, you have a bearish stochastic topping off in MACD. I guess at this point we just need some form of catalyst. And that really means we just need to see the ECB decision, and after that, the press conference. I look at my hourly chart here, and what am I seeing? I'm seeing price action oscillating around R1. Normally, if you trade the pivots, you know that you don't really oscillate around your pivot points. You break them, you either follow through or you get a false breakout. But you don't just congest and violate it repeatedly. So that, to me, hints indecision. So what's our strategy? If you want to try to play the rate decision, which again we said would probably be boring, then I would suggest that you do a straddle. You could consider putting some sell stops below your 3106 area and buy stops above your 3130 region. Okay. Again, there's no hint for us on any rate hike, rate hike is virtually impossible. There's no hint for us of any rate cuts happening. And if we hear that there's an unwillingness to aggressively cut rates this early, then we would look at a possible bullish breakout on that case, on that scenario, a hawkish sounding ECB, or if there's a suggestion of willingness to cut rates if really necessary, even say in the next meeting, then that could be used as an excuse to break below your 3106 area. The key thing, guys, is you listen to the full news or to the full press conference. Normally, there's a lot of volatility that happens while the press conference is going on. If somehow a straddle gets triggered because of that noise that comes from the press conference, I will just leave it be. And I will focus on what is being said. And did they sound hawkish? Did they sound dovish? Did they sound neutral? If they sounded dovish, if there's willingness to cut interest rates more aggressively, then again, I will just hold on to shorts if I have them. And if I don't, well, any buys I would close. If the ECB sounds confident, they think the economy is doing well, they don't feel the pressure of cutting rates anytime soon again, then to me that's a bullish sounding set of statements. And to me that would mean you could potentially see a further bounce, a further pullback than what we have seen over the last 2 or 3 weeks. MRC test of 131 and then 32, then down. So you're basically betting that we're going to get a whipsaw. Well, that's really a very good possibility. Remember, this is likely to be one of those not too interesting ECB decisions when there's not much pressure to take action. So one strategy could be looking for where can you find strong resistances and where could you find strong support. And I guess from your statement, you're thinking 131 is a good floor. Is it? Let me see this on the F4 picture. Right, 30.58 for me. But for resistances, let me see, guys. Yeah, that could be one strategy. Say that there's a non-committal sounding ECB. Not too dovish, not too hawkish. End up with a whipsaw. I like our support at 30.58. I like our resistance at 31.94, basically 3,200. So maybe a move that you can make would be shorts from that 31.94, 3,200 area and buys of the 30.58 price point if the ECB sounds non-committal. So again, it all depends on how the press conference will turn out. Excuse me. Alright guys, so as far as our EUR USD is concerned, I'd like to actually do a straddle ahead of the rate decision. If the straddle gets triggered because of market noise, remember that unless there's any explicit statement of hawkishness or dovishness that comes out with the statement, we don't want to hold on for too long to any trade that gets generated. Unlike the last time, this is likely to be a boring rate decision. There's not much pressure to do anything. So if your straddle of 31.06 and 31.30 gets triggered, either way, don't expect too much. You find yourself testing your pivot, be happy, get out. You find yourself around 31.80, R3, be happy, get out. There's no reason to look for a 100 pip move. If in case volatility takes you to 3200, we have a moderate resistance at 3194. That's a place where we can look for a short. We have a moderate support at 3058. That's a place where we can consider taking the buy side of your euro as well. But that's really provided that in the end everything looks indecisive. Okay, let me get back to overview. And guys, if you have any questions on any other pair, just feel free to bring it to our attention. Because we're talking about an ECB decision, obviously we'd like to focus on how your different euro pairs were to respond. That said, let me take a look at your EUR GBP. How do we look there? Euro pound seems to be in a descending triangle on a weekly scale. You've got lower highs and a relatively flat support at 83.92. Let me see this in the lower time frames. You've actually had a rounding top in your chart. Alright, DZ, let me just finish with URGBP. You've got dead crosses in your 4-hour EMAs. And hourlies, oh, this is nice. You're bouncing back up a bit in your EUR GBP right now. Alright, so how do we play this? For me, again, let's go textbook. If the decision sounds dovish, then I would expect your cable to strengthen. I would expect this current bullish candle to reverse itself and see your euro pound head back down. Maybe retest your descending triangle support. There's your descending triangle. If the ECB sounds a bit hawkish, then we would look for a follow through to your current bounce. We would look for this to make a run for your 8500 level. Now that it's that high, 8508, and then try to push through that resistance area. Textbook, as we said. Alright, let's see dollar yen. I do not want to trade your dollar yen with respect to your ECB decision. I just don't see why your dollar yen would be a big mover in what's essentially a Eurozone issue. But that said, let's take a look at how we're set up. So where is dollar yen? You find dollar yen at 61.8 retracement of its rally from from April. This is an interesting case because we closed below EMA lines, but we failed to take out 61.8 fib. I am willing to short your dollar yen if I were to find myself pushing below that 98.82 support level. If I find myself under that 61.85 area. The longer it takes for your dollar yen to try to break lower, the more that in your lower time frames we build a base. And as you build a base, the greater the probability of us bouncing off that base. So for now, I would be interested in shorting your dollar yen if 98.82 gives way. Give me a couple of hours more, and if there's no breakout either way, I would also be interested in the possibility of picking things up. Give me something around your 9900 level, or give me something around the 98.90, and I could be a buyer of dollar yen from that level. We're very well supported in our USD JPY chart. So, as far as dollar yen goes, I'm keeping a buy and dips approach in the near term. Now, how about medium run? I'm a little worried about the bigger picture for dollar yen. Let me show you. If I look at things with an indicator from the dailies, I would note that you've crossed below your zero line in MACD. You've oscillated around 20 in your stochastic. Now, that's bad because that combination between MACD and stochastic does suggest that you've got a bear market. What makes that idea even more scary or worse is that if I draw fibs, if I draw supports and resistances, you will find that yesterday's close took us below 99.95. 99.95 was supposed to be a strong support and I guess a barrier. So, thank you, Stuart. Yeah, again, nothing really from this decision. The important thing will be what will be said during the press conference, which is 45 minutes from now. So the session, the class may be titled Covering ECB Decision, but we're talking dollar yen because the decision itself is not something that I would consider market moving. Alright guys, so where were we? We're talking about dollar yen and we're talking about how I'm personally concerned. Again, indicators are bearish in the big picture, and we did push back below your 99.95 region. Exactly. So always remember that as expected, news is boring. It's when the unexpected comes that markets move. But that said, the press conference could give us an idea on where future policy will be going for the Eurozone, and whether you should be betting on a stronger euro still, or should you be reversing that bet already, expecting another sell-off? I'm actually looking at my other chart here, and I'm not seeing anything. I'm seeing the same candle that we had before the decision. Alright guys, let me get back to overview. So any questions on anything? As far as dollar yen is concerned, I am a buy and dips person, but technically right now, you're below a strong support 99.95. You have daily indicators that say that you have a bear trend. So that being the case, there's a risk that our dollar yen will sell off, that we get all the way down to your 61.8 retracement, to your 96.83 area. From there, I would fish for a bounce once more. Remember that in fibs, we focus on 61.8 fib, 38.2 fib as potential re-entry points, potential bounce off points. Alrighty, let me get back to overview. Any questions, folks? Any concerns? The stochastic make a half cycle. MRCC, I'm not quite familiar with. I'm not sure what you mean by that. What do you mean by make a half cycle? Alright, folks. If there are no questions on what's happening currently in the market, or there are no questions on the ECB, let me just show you something. I like sharing. If you're looking for a trading method, I'll share this in this room. You might want to look at this. It's the breakout system. What it does is it finds a support resistance level or straddle point, and then the idea is you want to take a trade. Pan on fire, when they say that a currency is well bid, that simply means that there's a lot of people that's buying it. If a currency has a flat chart, but they say that it's well bid, then you expect it to go up. Or they're seeing a lot of people in the buy side. Maybe if you look at the spreads, you're going to note that the bid price keeps on pushing up. And then all of a sudden the ask price will adjust and go up as well. That means the buyers at that point have overpowered your sellers. Oh, where were we? Alright, so we were talking about trading strategies. Yeah. So basically, this is something that I would suggest to people if you don't follow any system. Normally, you'd like to trade at a time when liquidity is expected to pour into the market. So that happens at the open of, say, Tokyo, open of the Russian market, and then open of London, of course, and of course, open of the US. Although for me, open of the US is a tricky situation. By the time the market opens in the US, you also have European traders thinking, let me get out. So this method really focuses more on the open of Europe. So what is it? Essentially, you can just do straddle trades around the open of Europe. You don't analyze the chart too much. The idea is just wait for the breakout to happen. Expect that because there's a lot more money in the market, there's additional liquidity, that could be the cause of the breakout. and that could lead to a sustained movement. How does this strategy work? Basically, before 6 GMT, you can identify the congestion in your charts. I used to look at the hourly level, but I thought to myself, why waste pips? So you look for the congestion in the 30-minute picture and define the high or low of that congestion as your potential entry points. And then by the time 6 GMT comes in, you place your straddle, you wait for the markets to break. If you look at my chart, 6 GMT is defined as this red line. So all these red lines represent 6 GMT, and look at the way markets tend to break out during that time. Look at the way how breakouts during that time tend to be sustainable. So that's what you might want to look at as a trading strategy. This is Euro-Pound chart, by the way. And look at it. I think you like what you're seeing. Well, DZ Vista, it depends on the kind of average range that your market has. If market ranges by 100 pips, then I would say target during that period of time would be about 50 to 60. So let's just say that at least half the average daily range ought to be your target for any breakout that occurs between 6 GMT all the way to 10 GMT. Okay, any questions, any comments? Try it out, folks. I've actually made an EA of it already, but I'm not, okay. I like sharing, but this is an EA that I won't be sharing for a while. Let me make some money off it first. If I had my fill, then I'll make it available for everyone. So folks, again, focus on the press conference. Try to see if the ECB's mood is optimistic. If they are optimistic, then that means you cannot expect any rate cut going forward. That might be enough of an excuse for your euro pairs to go up. If the ECB indicates a willingness to be aggressive in cutting rates in the future, in responding to situations, then that suggests that they're concerned, they're worried, and that to me would be a catalyst for a bearish breakout. Anyway, guys, comments, issues, complaints. Okay, if there's nothing, I guess I'll just thank you for joining this class and hope to see you again. I've got my normal classes on Thursdays, so I should be able to see you on Thursdays. Thank you, folks, and good luck. Good luck with NFP tomorrow.